Hey, what's up, guys? So in this video I'm gonna be just explaining my strategy. Some of y'all said like I should go through what you guys don't really understand, go step by step what you should be looking for exactly, right? So here we're looking at US30 as you guys can see. So with the strategy, first things first, what we do is we have to make sure that on our time zone it's UTC -4. You have to put it on New York, right? Sometimes it's UTC -5, depending on the season. And guys, this I prefer US30. I prefer US30 with this strategy. So you can backtest it on other currencies or whatever, but I think I got profitability through US30. And remember, guys, it's not every day that you're gonna find a setup. If you don't get a setup, there's no way you have to trade. So yeah, just keep that in mind. So right there, you're gonna mark firstly your 10 a.m. As you can see right there, you're marking your 10 a.m. and your 11 a.m. and 11 a.m. right there. When the market reaches to a point whereby like it's right here and we're expecting it to go inside for like trades, first thing a person might identify is that wait, there's a break of structure right there, right? And there's a fair value there right there. So looking back, there are certain low points which they can use as their liquidity points, like as their take profit points. Right there, after that break or strike, that market structure shift right there, they're gonna be expecting price to go inside the fair value gap right there. They're expecting it to be like this and go into the downside, right? And maybe targeting this low point right here, targeting this low point right here, right? That can happen, and I think it happened here, but we have to look at the bigger picture, right? So with this alone, let me show you what happens. The market gets inside the yes right there. Okay, it's going way too fast. Relax, bro. Relax. Okay, let me just put it like this. Yeah, let me just put it like that. So you can take this short sell within that frame right there. And guys, remember you have to like target the lowest hanging fruit, which is like near to like where the market is. Because being realistic, the market reaching there and reaching here, if you have something that you can reach which is near, why do you have to go for something which is lower? You see, the best approach is to target something which is near, like where the market is, you see. So like, yeah, that's why I decided to like take this one right here. Because as you can see, we saw a breaker structure right there, market structure shift right there. The market went inside that fair value gap. Then we targeted the downside, which is right there, right? Now, but in this frame, we can expect to take more than one trade. By that, I mean once you see that break of structure, then you enter for a sell right there. Then you go for the lowest point, which is right there. Now you're out. But what can you expect? Now you have that narrative, okay, the market took my take profit, right? But with the strategy itself, we have to be checking on where like the market swept liquidity, right? So when the market is moving just like this, we're gonna be targeting, we're gonna mark your highest point, which is right there. That's your buy side liquidity. You're gonna mark your sell side liquidity, right? Now, so now we are waiting for the market to sweep either of the buy side and the sell side liquidity, right? Once the market sweeps the sell side liquidity, we know it has to buy, right? Because it's basically taking out sellers and going for buys. But if it goes for the buy side liquidity, we know it's taking out buyers right here and going to sell. Now let's see what happens when the market enters our period, the time frame that we're basically focusing on, which is from 10 to 11, right? And on the time frame again, it's 5 minutes. You can go to 5, 3 and 1. It's not necessarily you have to focus on 5 minutes only, okay? You have to remember that. Let me just delete this fair value gap since I showed you that you can take that trade that we started with. And yeah, let's go to this one. So with this one, we're waiting for market to break either the sell side liquidity right there or the buy side liquidity right there. So let's see what it does. First things first, the market went inside, right? As I said, right? Now the market swept the sell side liquidity. Now what we're looking for is buying right now. We're looking for buying, right? So as soon as the market touches or sweeps like that sell side liquidity, again with that liquidity, which is a build-up of like equal lows right there, equal lows. By equal lows I mean let me just draw a line. These wicks that are basically they say like they're in the same level, that is a high liquidity point. They have been swept again with that sell side liquidity that we're basically targeting the most. That's giving us the clear direction, right? So if you can look back, you can see that there are other points of liquidity right there, right? So the market, once it sweeps the sell side liquidity, what we do, since we're anticipating for a buy, we're gonna look for a candle close to the upside, which has to be a bullish candle, right? Now right there on that candle, this candle right here, the candle that closed inside here, it closed as a bullish candle, right? So that gives us a clear idea of, yeah, you're going to the upside. Now, what are we targeting from here? Since this candle closes bullish, we're targeting the buy side liquidity, right? So you're going to pull out your tool and put a long position. You're going to be entering from there, putting your stop loss on that low right there and targeting the high, which is that buy side liquidity. The trade itself, as you can see, is a 1:2 risk to reward ratio, which is perfect. 1:2 risk to reward ratio trades are actually perfect, and it's what I suggest to people mostly, since it has a high win rate. And if you use proper risk management, actually you're gonna lose less. You put your stop loss below that candle, and we are targeting that high, which is right there. Let's see what happens. Boom, straight. The market doesn't even come down or retest, whatever. It goes up, takes the buy side liquidity just like that. Actually, right now we have taken 2 trades, right? You've taken 2 trades. I think it's enough to call it a day. But there are some people out there who are very, very eager to get this money, bro. So now, for someone who actually wants to trade the last move, since we have we had made this move inside, you can either have cut that sell to the downside or this buy to the upside. But for a person who wants to target another trade, since the market has taken the buy side liquidity, now we're expecting it to go down. Since as it took out the sell side liquidity, we expect it to go up, right? So now we're expecting it to go to the downside since it took out the buy side liquidity. Now, in this one, we're gonna see how the market plays out since it took the buy side liquidity. Now let's see what happens, what moves does it create. Now, from that move to the downside right there, we know that the market is really going down since there was a market structure shift right here. That previous low that was made was broken. If you can't clearly see this, you can go to the 3-minute time frame just to have a look of what I'm talking about. You can see that low right there was created and it was broken. Now, since the market broke structure here, we are looking for confluences. What are our confluences now? We are looking for a order block and we are looking for a fair value gap. Now for me, I personally look for an order block which is next to a fair value gap. That's how I know my trade is gonna be a bang. So as you can see right there, that candle, the last candle before an impulsive move to the downside, that's your order block right there. That's your order block right there. That's your order block. That candle, the black one before an impulsive move to the downside. Now, what's next to that order block? As you can see, we are spotting a fair value gap. Now, a fair value gap, people usually say a fair value gap like there has to be a wick. By a wick, I mean this long thingy right here. Most people confuse it by saying that there's gonna be a wick. There has to be like a wick on that candle, which we draw from it to this wick of this candle, right? It's not really like that, guys. You can, like, a fair value gap is just basically a gap between 3 consecutive candles, right? So even though there's no wick right there, this is still a fair value gap. So you can see right here, from that candle to from this candle right here to that candle, as you can see 1, 2, 3 candles, 3 consecutive candles right there. So now what we're doing is we're expecting price to fill this fair value gap, which is next to an order block, which is like enough for me to say, yeah, I'm taking this trade. This is a banger trade. If it doesn't go my way, it doesn't go my way. That's how the market works. It doesn't move in a straight line. So we're going to be expecting price to come inside here, and what's our target? The lowest low right there, which is right there. We're targeting for quick, you see, quick things. I'm not that passionate enough to hold a trade for the whole day. So me targeting stuff like this is actually, it puts me in a good scenario, right? So yeah, you're just basically gonna take a short position from there. We're targeting that low, we put our stop loss on that high. Now the thing is, I don't usually put it on that wick. I put it higher just to give it a little breathing space, right? Even here, I should have put it like a little bit lower just to give it a little breathing space in case it wants to come and retest here. So yeah, give it a little breathing space, which is right there. Now we are targeting the low there, which is right there. That's our take profit, which is right there. Now let's see how it plays out. Now the game here is patience. The trade is triggered right there. Let me just extend this, and just like that, your TP has been hit. Your TP has been hit. Now, this is one of the most powerful strategies I know. It filled the fair value gap, but went ahead and filled the order block, then went to the downside just like that. Now, with these two trades, the difference is volatility is more here. The volatility is more here. Here you have to be patient enough, but here there's too much volatility. In an instant, the trade is playing out in an instant. It doesn't consolidate or do stuff of higher highs, lower highs, and lower lows, lower highs, lower lows, lower highs. So that's an indication that the market is going to a downside, right? And yeah, that's my strategy on US30. And I hope this really helps you guys. And I'm really gonna make more videos on this, like do like trades each and every single day that I take. Why did I take this kind of trades? What happened with this kind of trades? You see, stuff like that. So yeah, let's just end it here, and I'll see you on the next one. Peace out.